LJ and the World Affairs Council for hosting us today. I have the opportunity and pleasure to introduce our CEO and chairman and my boss, Brian Moynihan. I've worked with Brian for many years, and his commitment to communities and employees has been unwavering and really is what drives him every day and, quite frankly, drives all of us. And as an example, in Charlotte alone, our headquarters city, we have over 70 senior leaders sitting on nonprofit boards. And last year alone in Charlotte, our employees volunteered over 200,000 hours giving back into the community. And so it is something that's really core to what we do. Brian also is very passionate about diversity and inclusion and has actually chaired our Global Diversity and Inclusion Council for the last decade. You all will hear a lot more about this and many other topics as Brian and Michael Marsicano, the CEO and president of the Foundation for the Carolinas and a great partner for us, will moderate a Q&A with Brian. There will also be time at the end for questions for all of you, so be thinking about that. And without further ado, Brian, if you and Michael could join the stage. Thank you.
Brian, good afternoon.
Good afternoon, Michael. How are you?
Okay. Thank you for taking time from an extraordinary busy schedule to join the World Affairs Council.
Sure.
You have an audience that has a keen interest in international affairs, but they also care a lot about Charlotte. So if it's okay, we're going to start on the global front and funnel down to here at home.
Okay.
Right? This meeting is timed fortuitously. You have just come back from about a month ago, co-chairing the World Economic Forum in Davos. What were your big takeaways with that experience, and what topics were particularly enlightening?
Well, the theme for the winter meeting, the annual meeting of the World Economic Forum, which everybody calls Davos, it just happens to be at Davos, was responsive and responsible leadership. And I think that set the tone. And so the word responsible, people understand. It's all the different elements. But responsive was actually put in, I think, by Klaus and all of us to focus people on really responding to what was going on in society. And by the way, there's a case to be made that some of the political outcomes are unexpected, are responsive to trends in society. And so he tried to get people to focus on that responsive side. We had to respond to the communities that needed us the most. We had to respond to the issues of the highest regard, the wealth distribution, disease, whatever it was. And then we had to be responsible in that we had to balance things like the impact of the just continuous drive of labor content out by digitization, electronification, whatever you want to call it, and that we had to think about those ramifications, what they call the fourth industrial revolution, the outcome. So you had sort of, the idea of being global, being collaborative, thinking about the world's issues, environmental, and then dealing with the fourth industrial revolution. Those were the themes that came out of it. And so it was a good week, but it was dominated by what happened on the Friday of the week, which was the inauguration of a new president of the United States that people had not predicted or thought about, and that was just very different for people to deal with.
Some of the greatest minds in the world were at Davos. Anybody that inspired you particularly, and what was their message?
Well, I was talking at the table when people ask about Davos. Davos is hard to explain because it's not, there's a tremendous amount of formal panels and things that go on, but it's actually what you sort of walk into that happens. So in terms of unexpected outcomes, you had the president of China give a speech, the opening plenary speech, and President Xi, you got up and talked against a backdrop of a debate about trade and about globalism and everything. And what he talked about was how the phrase he used was globalization is of the people, by the people, and for the people. And only a certain amount of people in the room understood that comes from the Gettysburg Address, and he's quoting an American president. So if you just step back and say, the president of a communist country, who is the leader of a communist party that runs a country, who everybody can have their opinion about openness and not openness and all this debate, but there is controversy about it, just quoted Abraham Lincoln about globalization, which was kind of an interesting outcome. And then, proceeded to give a speech that, if you close your eyes, could have been a speech by George W. Bush or by President Obama. It was really kind of interesting. So then we had lunch with him afterwards, and he was on the same program. So that was kind of an interesting way to open the session. And then we closed it with Henry Kissinger, who was fascinating. Those of you who ever had the chance to meet Dr. Kissinger, who is now 90-plus years old. And he just, in his way he does it, and the caricatures of him are as much like he is, went through the world and sort of basically chopped up the then current administration's progress after you heard John Kerry talk about how much progress they had the day before. So, well, that's inspirational. It's actually interesting. And so John Kerry had laid out a speech about all the progress he made. And basically, if you listen to Kissinger, he kind of pushed back on a lot of that, and worried about Russia and things like that. So it's just a fascinating. So I'm not sure any one person inspires you. The inspirational people are actually the leaders under 40, some of the people that do these scientific things you can't fathom, that are building these robots or trying to solve migration of people and figuring that all out, or climate change and all that stuff. That's what's inspiring, but interesting is more around that kind of dimension.
You mentioned there was a lot of conversation about the American election with President Trump. I would bet there was also a lot of conversation about Brexit.
Right.
What are your views on Great Britain's economic challenges and the European Union in general and the future of the euro?
So you have to think about Brexit as being a situation which was an unintended outcome. So, and there's been a series of those elections that were mispredicted, and Brexit being really a pretty big one. And so if you were, that night I remember going to bed at 10:30, 11 o'clock at night, was starting to look doubtful on the exit polls and stuff in Britain. The markets really started to go to heck. The next day, it was clear it didn't happen. The world shook for about 8 hours, and then life went on. And so what's been amazing to me is the ability of the world to shake off, the markets to shake off these very unpredicted black swan events and just keep going. But on the other hand, Brexit is a very troubling thing to deal with, because you're trying to erase 30, 40 years of history of how these economies came together and became integrated. Now you're trying to pull one out in a fairly sizable economy, 6th, 7th in the world or whatever it is, with no rules to how do you do that. And so we end up meeting with Theresa May, a group of 5 or 7 of us, and she is committed to do what the people asked her to do, which is to cause it to happen. And she'd given a speech in the UK the day before. But in the private session, her outcome was, look, I have to do this. It doesn't matter whether I agree or not. The people want this done. And now I'm just trying to do it on an orderly basis and try to buy as much implementation period as we can to make sure it's done as best way it can be done. But it's going to have an impact because, people forget they were allowed to travel freely, migration. We have, as a company, several thousand people in London. A significant portion of them are not UK citizens. What happens tomorrow? Are they going to take their kids out of school and move them across, to another city? This is real people, and that's the piece I don't think. Intellectually, you can get there, but the piece that's hard is you have real people involved that have to make real decisions about life. And as you're running a big company, and we're trying to, Tom Montag and Andrew and others are figuring this all out, it's kind of an interesting impact. And we're just a microcosm. Now take that amount, 250,000 people, whatever, supposedly work in financial services in the city, and think about all that playing out.
Well, if Brexit and the Trump election were a surprise by many, we may have surprises coming up. There are elections in France coming up, the Netherlands, and particularly economically, Germany.
Right.
You have a crystal ball?
No, that's a dangerous thing. The series of elections you laid out, are interesting. You have to put the Italian election in the middle of all that too, because you've actually seen. When I was in Davos, the people from Italy would have told you that Renzi would have stayed in the party and been in a different place right now. And guess what? A month later, it didn't happen. He left the party, largely because there's issues within the party, and I think he felt getting out of the way was the best idea. At least that's what the press reports. But that was an unintended outcome. And so you really have the volatility around elections. So when you think about economic activity in the United States, very solid, 2% growth predicted for 17 at Bank of America, up from 1.5 or so from last year. You think about the world, 3.4% GDP growth, up from 3% year from 16 to 17. And you think then about what could disrupt that. The problem is, when does the market not keep shrugging off these unexpected outcomes? And the French election is a big deal in that. And the German election is actually an incredibly big deal in that, although Mrs. Merkel's, the world owes her a debt for having gotten through Europe through what it's gone, and terrific leaders. So there's, again, not much expectation that could come out wrong, but come out differently than people expect. But nobody's predicted the last 3 or 4. So that, when you think about risk, the economic outcome of the world over the next year, these election risks are real.
When we think about the world economy, Europe, the United States, China, India, Brazil, they get most of the attention. What can you tell us about economies emerging elsewhere? Who's on your watch list?
Well, I think the reason why those economies get the most attention, you throw a couple more in, and the EU as a total, you're now dropping down relatively sizable to relatively small economies. And so, what goes on in some of these places is not as impactful. When you add Japan to that list, you add Europe in the total, and you start to get to fairly minor. So that's why people focus on them, and they focus on the developing ones. But I'd say that the country of Africa has got to settle in, and it's a bunch of different economies, a bunch of different countries, but there are hundreds of millions of people, and the issues of Europe of immigration are caused by economic dislocation in Africa, and so we have to watch those countries, whether they're on the radar screen for growth or opportunity, or they're on your radar screen for risk is to be said. So you got to watch that part of the world. You got to watch the Middle East because of massive change going on in some of the countries, including Saudi Arabia, and the change they're trying to drive the country through from an oil-dependent state to a non-oil dependent state. You have to watch. Hopefully Brazil straightened out, on the mend, and Argentina has recovered, but Brazil is really the driver. The impact of Mexico on whatever happens out of the current set of policy discussions will be interesting. So we watch all the economies, but the reality is, if you think about Europe and the United States economies, they're basically equivalent size, round numbers. China is about 70% of that. The U.S. consumer economy is as big as China's economy. So if those big economies stay stable, that's good. And their connectivity is really between each other and to China, and then Japan and India because of the connectivity. So as long as those countries stay relatively stable, those economies stay relatively stable, then the world will be all right.
Coming back to the economy in the United States, I happened to watch your interview with Charlie Rose, and he asked you about the Trump election. It was a month after the election. And you spoke to this sort of psychological shift in thinking. I think you said that we went from a glass half empty to a glass half full. What are the factors that prompt you with that thought? And do you feel the same after the inauguration?
Yeah, I think the consumer sentiment kicked up after the election. The business sentiment kicked up after the election. When you go see clients, having been around the country, they are very enthusiastic. They believe that regulation will be less, there'll be the opportunity will be higher, there'll be growth will be better. So if you sit and say, what are the 3 things that businesses worry about? Their tax rate, the regulation that affects them, and then is there opportunity for final demand for their products and services? Those things all seem to be in the right place, and you don't see that changing at all. There's a lot of talk about, well, is that waning? And it isn't at all. I mean, as recently as the last few days being with clients. So we expect it. There will be a point where that expectation may not match, and there's a lot of discussion about that. But I'm not so worried in the near term. And what you're seeing is the economic activity is actually starting to match that a little bit better. And so the big debate that you see in the world right now is that just enthusiasm will be matched with activity? And we're seeing consumer spending stay reasonably strong. We're seeing borrowing demand a little bit better. And so those things mean that it's actually following through.
So the outlook for 2017 economy?
We're at 2% in the U.S. And I think, my guess is, as opposed to prior years where every time the IMF or somebody put out economic projections, or our company did, that came down, this year it seems like the bias is more to up than down. So we feel pretty good.
Those of us in Charlotte sometimes can't really get a hold of just how big Bank of America is, a global powerhouse. And I imagine that means that trade and trade agreements directly impact your bottom line one way or another. We seem to be on a roller coaster ride on trade. What are your thoughts on trade?
The policy discussion about trade is going to be fascinating, and the question is whether it's the best way I understand and read is it is a discussion of getting a better deal for the United States on a bilateral basis versus a multilateral basis. And that discussion's a fair debate because you can argue what that'll play out. It'll just take time. And so meanwhile, things will go on. And so I think, the risk in the very near term, not high, but over time, trade is critically important to the growth of this country and the power of this country and the capabilities of this country. Finding markets when you're a big, mature economy is important. And to have our businesses, and especially a group of colleagues like this that are international almost by definition, that's why they're here, it's critically important. So I think as people figure their way through this, I just always believe there's a centralizing impact of policy over time because the facts, as it plays out, it tends to drive people to the momentum of the business system and the momentum of the capitalist system and the momentum of the policy system, which tends to be more pro-trade than not.
I think we've all been taught to think globally and act locally. Charlotte is blessed to lay claim to the global headquarters of your bank, and your local impact on our community has been a game changer for this city. What role do you see Bank of America in Charlotte going forward?
Well, they finally gave up asking about, one of the Charlotte newspaper reporters asked about what we're going to do. We'll do the same thing we do today, which is to drive, basically, as Andrea rattled off some of the statistics, drive our company to reflect what goes on in the economy. So I think, Charles, if I got this right, we did 200 million more small business loans this year than last year, new originations. We're adding small business bankers, so we're helping that part of the economy. We're just trying, the idea is we can only be successful and we can only be sustainable by all the economies we serve, and this is one of the biggest ones we serve. In one of our bigger markets, and then it's our headquarters town. So you'll see it. You'll see the volunteer work. You'll see the charitable work. You'll see the impact through nonprofits that Andrea laid out with the 70 senior managers. You'll see, hopefully, the leadership of our team into the broader churches and schools and stuff. The ability to attract the talent. We pay $30 billion in compensation, and there's a significant chunk that goes in it, which provides a lot of economic impact. But it all comes from serving customers and clients, and it just doesn't change. People always ask me, it'll be the same next year as this year, a little bit bigger, a little bit better, I hope. Yeah.
So I have so admired your personal stand and the stand of the bank on HB2 on discrimination grounds. Some people believe HB2 has really hurt our local economy and state economy, while others think our economic engine just keeps on keeping on, suggesting it really hasn't hurt the economy. What's your take on that?
Well, the answer inevitably is going to be both, in that there's going to be an economic engine which keeps going. The question was whether that could be bigger or smaller. And what I know from circulating other states and other places we do business is companies are moving to other places because they don't face an issue that they face here. And so it's not what you lose. Obviously, with Fred and others, the All-Star Game and the NCAAs, that gets a lot of attention, and it's a very important and critical reputational question. The question is what you're leaking behind the scenes. And so I know, employers who have choices to make. One guy was playing golf out of the blue and just happened to talk to me about it, where I was going to locate something. Another person that is more formal that they're doing. And you just see that they're making their decisions. So whether it's conventions, whether it's location of functions, whether somebody buys somebody and have two and they got to locate one, whether it's incrementally adding, and it's just behind the scenes, it's deteriorating. And that, I think, the world has to deal with. Now, does that mean the engine stopped cold? No, because there's a wonderful community, wonderful momentum, but it's never going to stop cold. The unemployment rate here is sub 5. The growth projected to be 4%. All that that's all good stuff. But the question, could it be higher, faster, better? And that's the debate. And you see real impacts of that. And from personal experience, these are people who talk to me one-to-one. Right. And I don't know a lot of people I'm not talking to. And that's the question. What's going on that you don't know about? What convention decided to take you off the list? What location for a distribution facility took you off the list? What corporate headquarters consideration for a foreign company that there's a lot of them out here just took you off the list because they just didn't want to be bothered with the controversy? That's what eats you up.
We've been trying to secure a hotel deal on top of the Carolina Theater, which you have been so supportive of in the bank and its restoration. And the developers have been having a hard time getting equity. And that whole commercial real estate, it looks like we're building things big time. There's a whole another story that's under the radar screen that hasn't even been talked about.
And so, I know and so it's not. I was talking to Hugh a month ago, maybe a month or so ago about this, and Hugh was the son too, and we were sitting there saying, it's not what you see, it's what's obvious, it's what's not obvious, it's eating you up. And that's where you have to be careful about the long-term impact of this. And that's where my caution to other states is think careful what you ending up with the situation.
I know you've talked about this with your colleagues on the Charlotte Executive Leadership Council that Lynn Good chairs. Thank you for your commitment of time to that effort. That coupled with the great work of Andrea and Kathy Besant and Charles Bowman, you've got a team that really is into the civic life of Charlotte. So the bank has a...
I was in Kathy's office last week, and she's got the map of the next project on the table.
I'm sure she does.
For the North Triangle. So I said,
Yeah.
So she had the whole thing, and they just left the meeting. I said, oh, now we're in trouble, so we'll do what we can.
So with all that civic energy, what do you see as Charlotte's biggest opportunity in the year ahead? You mentioned North Tryon, which is great.
But I still think we've got to figure out some solution here, hopefully, and then I think that then clears away an obstacle. But and obviously we had the situation that the mayor had to handle and the city manager and the police chief had to handle with the shooting. But those will come, those are very serious situations, but all cities face them. I think if we can get ourselves sort of off the radar screen, I think this is a dynamic place. I mean, I go a lot of other places and talk to mayors and city managers and police chiefs, and this place has a very dynamic atmosphere to a great educational system, great restaurants. The impact of Johnson Wales over time in the restaurant community, even my 15 years I've spent a lot of time here, has changed. The big employers, the impact that wasn't felt when we downsized the company by keeping the headcount relatively flat when we took 40% of the companies and headcount down over the last 7-8 years. Those things I think bode well. How that Wells handled the transition, I thought it was well done. So I think there's great opportunity. You just have to remember at the end of the day, it's going to be population growth and jobs are going to play off each other, and then the educational system, the work we're doing in pre-K, and all this, that's a common theme through all cities, and those issues you got to straighten out, and then the infrastructure's got to be built to support the population growth, because you will, and so the issues that we talk about with the group, Michael, that you serve on are the issues, but they're not unique. It's just, right. But I'd rather have this deck of cards than other cities who have population decline, businesses pulling out, and things that the city doesn't have.
We're still a brain gain community, and that's a big plus. Let's move to the bank itself and its strategies. Leading financial service firm, what areas of opportunity and growth are you focused on right now?
Well, at the end of the day, it's, we drive what we call responsible growth, which is got to grow, no excuses, got to do it the right way with the customers, got to do it at the right risk so we don't repeat the issues of the past, and you got to do it on a sustainable basis, which means how we have the best teammates, how we drive our environmental and govern ourselves, and culture and that stuff, and that's and how we drive our community work, how we drive our charitable work, all fits in. And so the opportunity is just to do it over and over again. And so talking to Hugh, and he had to do a different thing, which he had to make sure he was still going to be here today, or I was going to be here today. I don't have to worry about that. I'm not allowed to make an acquisition. It's illegal. So people say, how can you be so resolute? I said, it's against the law, so it makes it easy. So what he used to do when I was on the other side and had to hide from him once in a while with my old boss, I don't have to do it. So it's just organic growth. One more customer, one more capability, delivered well, drive the customer scores up, drive the digitization. Michelle Moore sitting in front of you is helping us lead that charge. And so, but you have to be in the monotony of excellence. You have to be willing to just get up every day and say, we will grind at this and improve. And that's when people get distracted, when something becomes a shiny penny or the interesting idea. So, one of my roles as leader of the company and one of the roles of my senior management team is to keep people focused on task and not let them get distracted, not let them leak back. So everybody says, well, don't repeat the mistakes of the past. That is an element, subprime lending or whatever, buying a company that was in stress, whatever. That's not really the issue. The issue is to drive the simplified model through and through and through, and then become more and more excellent. And that is hard because as a big company, there are a lot of people coming with a lot of better ideas in their mind, not in your mind, but and to keep people focused, and that's really important. So we have opportunity in every business, in every product, in every capability, in every market. We have planned every market out now, and our market share in Los Angeles is single digits, and wealth management's 25% in other markets. So you sort of say, how can that happen? And you sit there and say, it's probably because we didn't try, right? We're building out Denver, Minneapolis, places like Grand Rapids. We're building out. Grand Rapids is 700,000 people, and we're adding branches. We only had 5 branches, and somebody said, well, we only have 5 branches. He said, well, whose fault's that? Ours or theirs? And so we have to think about building out those markets that we're not as represented. But again, it's just the same strategy, and the team enhanced dramatically every day, but the same strategy. So it's how do you keep focused, and how do you keep that tedium, and how do you not become interested in something that's going to take you in a direction you shouldn't go?
You must be watching the Fed on the interest rates. How will their plans impact the economy and specifically the bank?
Well, I think the Fed has been exceedingly transparent, so there's not a lot to add to the minutes, and they are now more on the side of bias towards tightening. But that's kind of an interesting academic discussion because the nominal rate, i.e. the actual rate structure, is so low that it's just unprecedented. So we will, so we've moved from a quarter on the Fed's fund rate to half to 70. I mean, these moves are like incremental. The Fed's funds rate's only been below 3%, like in the recent past, i.e. the last 8 years, and then like a couple times in history before. So the 10-year bond trading at these levels, 2.5% or whatever, is way below the long-term average. And by the way, it's never done it that often. And so whatever they do, they'll raise rates because they sort of can. The economy's in good enough shape. That helps us a lot. We earn a lot more money. Everybody will think we're a lot smarter because we earn more money, and all we did is just build a business model that benefits by it. But the reality is the good news is the Fed feels the economy is strong enough, unemployment levels are low enough, wage growth is strong enough, they're willing to move up and become more normal. And if that's true, then you ought to say they've guided the economy through a pretty good place. But the question then is now what I get paid to do is worry, and what's going to be the next recession? What's going to cause it? What are you worried about? You talked about elections. You talk about bad policy. You talk about, conflict. There's all these things you have to worry about. But the reality is the U.S. is in pretty good shape, and that's what the Fed will reflect, and then we'll make more money from it.
It's been said that banks have become technology companies. As a customer, what are we going to expect from the banks in the future on the tech front?
We spend a lot of money on technology every year to improve the operating effectiveness of the company, to improve the safety, security, soundness of the company, to improve the cybersecurity. But we also spend a lot on new capabilities. So right now, our new P2P system is literally rolling out as we speak. It's an industry-wide effort to pay each other, and not that we have to pay for this event, but if you're splitting a check, you can immediately move it by email or telephone number, cell phone number. That's coming out. Erica, which is a voice interface artificial intelligence engine, so you can just talk to it and it'll do things and answer your questions. That's out in sort of test, and we'll drive that out. But meanwhile, you got routine things like the ATM improvements, the ability to access the ATM through waving your phone at it and have it spit out the cash. And so the ability is to drive all that technology through. So just make it easier and easier for the customer interface to us, easier and easier to find out what's going on. Try to drive the customer's understanding of the capabilities to get digital stuff, so they will take statements and things which are important to us because it's simpler for the customer, more secure for the customer because the statements won't get taken out of their mailbox and things like that. But the reality is customers have to get used to it. So the technology is always the easiest thing to do. The hardest thing is to get the customer adoption and stay right with them. And so the perfect example of that is in August 2012, we brought out the ability to take a picture of a check and deposit it. So everybody is really excited because we're up to 20% of checks deposited that way. That's terrific. It's 900 branch equivalent. So we used to have 900 branches take those checks. That's pretty neat too. There's still 50% of people go to an ATM and deposit the check, and then 30% go to the teller. The 50% of the people in the ATM are sticking the check in a ECR scanner, which is exactly the same as taking a picture by your phone, right? So the point is that it's actually more convenient. They don't have to drive up. They don't have to wait. They don't have to do it. Now, there are certain things that they'll say, I can't get money back or something like that. That's a different question, but a lot of it's just straight deposit. So we've done a wonderful job. We're the penetration, the statistics, the 21.9 million mobile banking customers and everything. But the reality is you still have 80% of the people don't deposit by taking a picture of consumers that could do it in part. And that serves you the opportunity. So it's not a new piece of technology. It's actually getting customers familiar with it, used to it, comfortable with it. So we've had a 100-year-old person sign up for a mobile banking account, which is optimistic, and anybody's definitely. And we had an 84 or 5-year-old one came in, and everybody's been trying to best it. So I don't know what statistical probability someone over 100 is, but right now we got 100. I think Michelle's the oldest customer did it. But these technologies are now in the hands of everybody, and so driving. But so when people talk about technology, they're talking about what's the new thing. The reality is what's the ability to drive that technology and get it really used. And that's what changes the operating structure of the company, and the convenience of the customer, and the satisfaction and delight of the customer.
So I'm a professional student of philanthropy, and Bank of America is one of the most generous.
That's a good thing to be in your job, I guess.
Okay, I hope so. Bank of America is one of the most generous corporations in the world, and your commitment to communities is unsurpassed. So how do you think about the investments in philanthropy you make as a company, either here in Charlotte or around the globe?
Well, one of the things I think the team and our employees are proud of is we never cut it, we never change it. We changed what we did, but we contributed the same amount when we were, getting the crap kicked out of us by somebody or otherwise. And so we held it up because we thought it was core to what we did. It's part of being sustainable. The oldest part of our company has been around for 230 years. The part here is, 100-some years, 150 years or whatever, and you go in 100 years here, and Merrill Lynch 100. So you have all these huge rivers that came to this big tributary in North Carolina and end up in this big river. And all that charitable work and everything comes together. So we just believe to be sustainable, you got to do it. So we do that. So how do we think about it? Two broad strokes. One is sort of market by market, what I call not micro in amount, but micro in intent, which is, Charles is market president here in North Carolina, or his colleagues across 80-odd markets thinking about how do we work with the pieces. And then the second is the big programs. And so Museums on Us is one that goes both ways. It's local community, but it gets kids and others, everybody in the museums around the world. Art restoration is ultimately a global program. The Wing Victory in the Louvre, in the Tate galleries, and the Israeli museums, and everything we've restored, because nobody likes to give money to restore paintings. Right. Restore works. Magna Carta we're restoring, and nobody gives money for that. They want to give money for building stuff. We think it's neat that you do that because you can build a story around it, a history around it. And so, but that still comes down to some museum, the Dallas Museum I was in 2 weeks ago, whenever it was, that we restored a piece of art for them, and it comes down to local, so you attach that together. Then you go into the work we do with platforms, and so whether it was the work we did with Skip Gates and the sponsorship we've had with the MLK, the America After MLK series, whether we do it with his other series, whether it's the work we've done with Ken Burns on documentation, because it's a nonprofit, and a lot of people don't understand Ken is one of the most successful nonprofits in the world, the work we do with Sal Khan on his nonprofit in education, the work we do with Red and the Global Fund and Bono on AIDS, mother-child transmission of AIDS. These are now global platforms of which we then make local. And so those programs are the environmental work we do, which is mainly for profit, but has nonprofit elements to it. The community development work we do, again, which we accept lower rates of return. It's not a charitable gift, but it helps us do it. The CDFI is $1 billion. This is all built around programs to just help economic activity and social activity and cultural activity go. Hugh came to me a few years ago and asked about the symphony, and we were able to help there. And I met the new director out there today. And these are just trying to keep these cultural icons go. And so if you think about it, we come at it pretty simply. In Winston Churchill, they're bombing London, and it's just disaster. And he goes to Congress, to Parliament, and they're having a budget debate, as they do in a very formal way, and somebody stands up and says we're going to cut the National Endowment for the Arts or whatever the right program name there. And Winston Churchill's paraphrasing to say it. I don't know if it's accurate because everything's attributed to him. He said, so if we're not fighting for the arts, what are we fighting for? And so our belief is that we're here. That's part of who we are as a community in Charlotte and how we have to help. And so that arc is a lot of things. It totals 175, 200 million a year. We gave away 5,000 houses, to half of them to returning veterans and half to first responders and other, that we had to reposition. So our Habitat for Humanity, we do a ton of work with Joe Price has been helping that. There's just, and so it's all around programs and thought process, but it all comes down to that basic thing. If you're going to be sustainable in the Charlotte community, if you're going to succeed when the community succeeds, you have to help its core institutions be successful. Some's with your time, some's with your energy, some's with your talent, some's with your money, some's with your challenges, some's with your seed money, some's with the contacts or advice you can bring personally, or you can get people to help. And we try to do it all. And the team does it. I don't do it. I just go out and play golf and watch them. So.
You mentioned Bono.
Yep.
You and Bono are rock stars.
No, he's a rock star, believe me. You learn the difference quickly.
Tell us, tell us about Bono. I'm intrigued with him.
Well, the story started 5 or 7 years ago in Davos at a chalet at the top of the hill where he was at an event, and he was struggling with how to raise money for Red. It'd go back to when Red started the branding work and stuff. And how could he keep materializing that among more and more global brands? And so he had Apple at the time, I think he had Coke, but he's trying to figure out financial services. And red being red, and red being our color, he just quickly said you could do a red card and life would go on. And so I talked to him a while about it that night. And then, these credit card things never work the way people think because there's just not enough money and they generate. And so we talked to him, and Ann Fanukin and the team started working. We started to figure out what could we do to help. And so that led to an invitation for him to speak at Georgetown. And so I said we'd done a support with Georgetown's McDonough School of Business. We said that we'd bring some speakers in, and so I said you come speak to the kids. And this is the hardest ticket ever to get at Georgetown. Every president spoken there, every first lady spoken there, every ambassador spoken there. Nobody's come close until the next guy, who was Buffett. We got the next year, who actually was the kid, was more crowd. And so he came to speak, and he gave a speech that day. If you can find it, it's actually a fascinating speech. He gave a speech about being an American. And those of you who may have seen the tour, he plays with this theme about being an American. That was the best speech I've ever heard about why you should be an American. And so, and it was about America's a dream. It's an idea. It's not, it's not territorial. It's not inherited. It's not, and you guys ought to understand it. You solve the really big problems of the world because you're an idea. And so, the world called. You did this. The world called. You did that. The world called, and George W. Bush created PEPFAR to create the funding to stop AIDS in Africa, so 30-odd million people were saved. And so, and as I listened to say, I said, so wait a second, we can do this, because the question was how you can do a global program when outside the United States we're corporate investment banking and markets, we're not a retail. And it really came down to, you could visualize how our team could help in a battle. So if we'd done the credit card, they'd have gotten some money out of it. So what we did is flipped it around, and so we started talking to them, and that led ultimately to the Super Bowl commercial where they download the song, and we raised $3.6 million for that in a day. It led to, on the 10th anniversary of Red and the work with the Global Fund, we catalyzed an amount that went from 225 to 250. Just last Davos, they're up at almost 450 to 500, and all this money goes straight through. And I've been to the clinic, I've been to a clinic in South Africa to see it. And so that kind of moved along, and then we started the food trucks, and then we started the pictures of kids on the ATMs, and we started the shop-a-thon, and it just became one thing after another, all with a view that what we did is we used our money to kind of underwrite the impressions in the marketing sense in the world. And it's been pretty interesting. And I keep telling him, if he just walks into a branch once in a while, I'll have everybody waiting for him next time, and he'll do whatever they want.
For sure.
But he's amazing. Just in the last 72 hours, this PEPFAR is up for approval. And so we happened to do an event with Mrs. Bush at the Bush Library a few weeks ago, and I didn't know it was, and she mentioned to me, she said it's up for approval. And PEPFAR is the president's whatever, but it's some name, but it's the president's fund that they created to help fund these projects. That was the start of a real fight on AIDS in Africa. And it provides a lot of funding, and so we got to get that reapproved. And even Bono, a couple days ago, was meeting with Pence, what their paper said, and trying to push them through. And we got to get that done, because at the end of the day, this is about saving people's lives. This is not hard. There's a lot of international aid that people can try to figure out what it does. This is pretty simple. You give them money, the Common Fund takes the money, and they basically go in and do 4 or 5 core programs, malaria, AIDS, and it just
great.
The throughput's amazing. And so it just was this winding road that ended up in a thing, and he's been terrific in his support of our company, and it's not without its complexities, because he's a rock star.
He's a rock
He has a band, and they are equal partners in the band, and it's very different. And associating with a bank in 2013, 14, when did we do the commercial for? That's an interesting question. Think about it. And the world was going on, and he was willing to take the risk because he knew that we were good people, and the team would do it and help them. And they've been unbelievable, the amount of response. We did the food trucks where we matched 40 cents for every dollar, because 40 cents buys the dosage, and that's. And it's parlayed, and it's got the interest level back up, and that's because we had 200,000 people could go out and tell the story because they were energized by that. Was a connection to America. It was a big problem for America. America helped solve it. Bank of America ought to help solve big problems. Here's a way we can do it by just asking people to help. Our teammates, and they could ask their clients that. It didn't take. It wasn't like it was. We have not enough money to solve it, but you can catalyze the money to come.
Well, it's a great partnership, and partnerships are a hallmark of the way the bank works. You also mentioned Sal Khan,
Right.
And you've got a program, Better Money Habits.
Right.
Tell us what that's about.
Well, the question was, when you wanted to educate people about finance, and you were, we had tons of content and material out there that people didn't take advantage of, and it was fair and it was honest. And I met a colleague here that helps us do our plain speaking work in the company that I met earlier at the reception, and we developed this plain speaking and simplification and tell people the facts and help them do, and great content. And Dean and Tong and Michelle and our colleagues, Charles and others working, Andrew Plepper working on tons of content, all spectacular. Nobody touched it. Not literally, but figuratively. And so the reason why is it needed a good housekeeping seal of approval. So Andrew and Ann and these others seized upon Sal Khan and the Khan Academy method. And so we said, Sal, can you start producing some stuff? And we started working on a partnership where he first did, I think the first was what your paycheck is and how it comes out. And we forget that we've added so many complex factors in financial services to people's lives, payment methods, automated payment and debit cards and credit cards and all that stuff, that people are confused about it. And then we've added all these deductions and stuff in a paycheck. And frankly, none of us are good parents, including myself, that sat down with our kids and said, here's how it all works. I don't remember my dad doing it either, but somehow I figured it out. And,
Quite well, I'd say.
Well, when you get that first paycheck and it all goes to FICA and you're, what's that? You start to figure it out. But so we started with the paycheck, and then we started with, should I put money in a 401k? And so Sal's method is unbelievable. If you don't know what Sal Khan Academy is, your kids clearly do. But his method is very Socratic, very much you learn everything before you go to the next step. And so it just really worked. And so, the viewership of our Better Money Habits site, which is still Bank of America branded, it's not like it's not, but driven by Khan Academy. His legitimacy is to be an honest agent and telling the story the way it is. And then his straightforward method of education, it took off. And so now people watch all this content. A lot of content we were able to repackage and play. We did an internal 401k when Andrew was still head of human resources, telling our own teammates, why aren't you putting money in a 401k? You basically get a match. It's a 100% return. You put the money in. How could you, even if you leave and have to pay the penalty tax, it's still better than not doing it. But still, we only had, in a financial company, we're at 70% or something like that. You're saying, so we drove at that, and then we take that to other companies and help them understand. So it's a great thing. He is a gift to the world, because in the end of the day, his company would be with 150, 200 million, whatever number of users, and it would be a very valuable private enterprise. He just never wanted to take it. And it started with a simple idea. His niece calling him up and saying, I don't understand math, and they're going to put me back from the honors class to the non-honors class or whatever. And he said, you got to understand this. And he just started teaching her. And then all the relatives started watching, and that became Khan Academy.
Well, I have one more question before we open up to the audience, so be thinking about what you'd like to ask Brian. And I thought it would be best to end with your employees. You've made some important moves recently, raising the minimum wage to $15 and extending parental leave. What brought you to these industry-leading workforce commitments?
Well, so somewhere in the interesting times that 10 and 11 were, Andrew and I sat down, and it was before the Affordable Care Act came up, and you're reading these statistics about, how much people are paying for health care, and you'd never really focused on it sort of with a different point of view. And so Andrew and I sat down one day, and we were just sort of talking through it. And we basically made a series of principles in 2010 that we were going to drive the company to. One is there was going to be a minimum rate of pay that meant an individual got paid above the family of four level in the United States, so that we'd never have a question our people couldn't earn enough to live. And that was one. The second is everybody paid the same health care premium. So I paid the same as everybody else. And we basically cut that and said we dropped the health care premiums for people paid under $100,000, $75,000 down and indexed it. So they've been flat and it came down. And so now if you do the screening, that we did. And then we dropped that down. And then we said, how do we actually drive it down further? And what we said is we need people to do the wellness side of the screening. So we brought the screening in and gave people another $500 off if they did it, and their spouse did it $1,000. So you put that on a monthly basis. That basically brought their cost down about $125 for family coverage or $275 for family coverage. And then I started raising it on the upper paid people because I needed to fund it. That made me unpopular with certain people. And so we passed through only up pay, we haven't passed through. So we did that in healthcare. Then on the family leave, we were at 12 weeks. It became clear that we had to move, and we moved to 16. And we've been very aggressive for partner rights. And frankly, when the marriage law passed, it actually saved us money because we've been subsidizing that and grossing up for taxes for years. Not that it saved it much, but we've been doing it for 20 plus years. Hugh probably goes back in the mid-90s when the company started doing it. So these are all those things, because at the end of the day, we need the best people, the best talent. And our view is we got to have them stable, and turnover and competition are going to come after our people. And how do we do it? And it comes from just being a good employer. So through Andrew's leadership and now Sherry Bronstein's leadership, and through my management team saying, when these things were costing $100-200 million when a year and expenses were tough, we just said, nope, we've got to do that first, and everything else falls behind. And I think it's helped us. It's helped us. And at the time, it was probably counterintuitive. And then the 15 became, frankly, math. We were at the point where we were 14, 40 or 30 or something like that, and a 3% raise was going to put you close enough. And I got tired of having people explain to me how this was the biggest thing, and I said, they didn't realize how close we were, so we just pushed it to 15, which is an extra, whatever, and it'll keep going up from there. This doesn't stop. And so we just, in that paycheck as of the first week of February, it was at 15, and so for the whole thing. But by the way, it's not based on 15. It's based on this basic principle of, that we have the luxury of being in business with hedge the margins, and this is not a. There are other businesses which have very different elements to this, and this is why you have to be careful this type of legislation because you have high school kids, that other companies can't afford to pay, and they'll just cut it out. Not volunteer, but working after hours. Like I used to work in a Bonanza Steakhouse, if people remember that chain. But those jobs will just go away, and people will manage around them, and even starting jobs. So you got to be careful about this, and so. But for us, it was easy because it was the right thing to do. And us, we had the margins to do it, and we just did it.
Well, so you've come a long way from the steakhouse.
Yeah.
Let's open it up to you folks. Sir.
So here in Charlotte, over the past 30 years, we've had the opportunity to have the front row seat to watching consolidation in the banking industry here in the United States. And now we're starting to see more transnational consolidation. Is that going to be the future? How does it affect an institution like yours? And how will it affect a city like ours?
Well, I think, so our market cap now is the third largest in the world at $260 so billion, $11 billion times $24, 11 billion shares. And so the luxury that we have is that there's not many people that have an ability. There's only two people with higher market cap than us, and both of them would be illegal to do a deal with us, no matter how we did it. So we don't have to worry about that. Then on the other side, we can't make an acquisition that has anything to do with a deposit institution, so we don't have to worry about that. So basically, we're a great agent to advise people on what to do. When it used to be that, we go and advise somebody, sort of say, well, how come you're not buying this, right? They were kind of suspect of why you're suddenly thinking it was a good idea for them when your company was in the thing. So we could advise them. There'll be a lot more consolidation because the plain scale requirements that go on in a business that go on, and the customer demands for new services, the customer's demand for globalization, capabilities that are global outside the United States, middle market companies. So you see that go on and on. The ability for companies to acquire from outside the United States is actually very tricky right now in the sense that you got to sort those places from where they're coming. So whether it's the Canadians who are well capitalized and the rules are similar can do it, but other countries, because of the math of the way they do the rules, don't have enough capital. If they try to make U.S. acquisition, it would trigger them having a lot. And then you got to remember plain size. So to be competitive in the United States against the big company, there always will be smaller banks who will be very competitive, and we 100% they're clients of ours. We love them. We try to get them out of regulation because we don't think it's fair to them either. That's not the question. The mid-sized banks, for them to be acquired, they're actually very large banks, numbers-wise. And so the interesting question, where everybody says X could buy Y, you forget that the Y they're talking about is actually bigger than the X. Or it's so big that they'd have to become a U.S. company. So I think there'll be a constraint on outside coming in, with the caveat of China, because the size of those companies is huge and getting huger, and they earn, some earn $40 billion after tax a year. The biggest U.S. bank earned 25. That earnings power difference, there's a question about as China about, are they reserved right, and all that stuff. But the reality is earning that much money, and the economy is already consolidated in banking and are already big, and that is the biggest threat to the United States in terms of acquisitions coming in. The Canadians have been active and will continue to be active, and we've seen it in the communities here and in Virginia and other places. The reality is that sooner or later it becomes a U.S. company because the size of Canadian economy versus size U.S. inevitably says if you actually consolidate, and so they're going at it. But the question is, when do they make a decision ultimately? And then maybe the Japanese banks have some presence and they're big enough to build it, but the European banks right now are not really in the condition to expand. Because the capital ratio, they already suffered because the capital ratio of the companies outside the United States on the same asset size is a lot lower because we focus on, this is getting technical, on tangible common equity, and those things, it require them to raise a lot of capital and do the deal. And I just think that's going to be hard. But it's going to keep happening, and it's because of the same reason there isn't XYZ hardware store in every town. It's just the economies of scale and the benefits of the customer will drive the world towards us over time.
Way in the back.
I'm Michelle Cofino. I own Queen City Metal Recycling, and you talked a lot about trade. How do you think that Bank of America could bring awareness to tax credits? We export about $7 million in electric motors, and we're really faced with struggling for inspection, devaluation of currency, trying to export, plus being competitive in the steel market.
Right. One of the questions is, with a strong dollar, does it? And the U.S. dollar is going to be strong because it's the quality of the country, and that's what you've seen relative to other currencies. And leave aside all the other reasons it will be strong, but especially as we raise rates, you can see the world's investments come here, because if you can invest outside the United States for half the yield, the investors are saying, I can go in the United States and drive it, and that's kept a lot of money coming even as rates raise. It's been pretty interesting. So, and the dollar strength, and that's going to happen. All things will ebb and flow over time, but in terms of the tax credits, the authorization of the Ex-Im Bank and things like that, those issues are still out there, and are not cleaned up yet, and we need to get them cleaned up. And so I think the thing about a transition is you got to get the people in place that then put the issues on the table, and they're still getting those teams in place, and that takes time, and it always takes time, and that's going on as we speak. So hopefully some of the structural elements about how you can, the Ex-Im Bank got authorized, but they didn't have a quorum, so they couldn't appoint to do anything over $10 million or something like that. And we need to figure those things out, and I assume they will be.
Yes, sir. The Honorable.
I'd like to just make an expression of the gratitude for the role that your team plays in the security part of Bill Fox.
Right.
We host forums in different parts of the world on terrorism finance. And you've set an important standard, as well as helping other countries in our efforts in collaboration on technology and sophisticated software. And the role you're playing is really critical, and I want to thank you for that.
Well, thank you, Congressman. A team with Kathy Bassant's team and in the security team, and a fellow named Craig Fellick that works for Kathy, and then Bill Fox on the compliance and intellectual content and how to think about scanning the data. We appreciate all the support we get from the government and the work we do with them to keep our company and the employees and the customers safe. But it's still it's a lot of work and a lot of battle. And then the value of the information and helping solve crimes and stuff has been it's something we don't get a lot of credit. So I thank you for saying it publicly, because in the end of the day, we do a lot of work to help the government find bad people and work at it hard.
I think we have time for 2 more questions. The young woman in the back.
Thank you so much for allowing us to be here. We're Hopewell High School, and we just have a few questions, if that's all right. We don't want to take too much of your time, because we're really eager to hear from you, and this is our first experience. So as long as that's okay,
See this guy here named Lee McIntyre? I'm going to volunteer him to whatever I don't get to, he can go back there and help you out. He knows everything that I know and more. So.
Okay, thank you. Our question is there any advice you have specifically for young people first stepping into the workforce that helped you gain success and would apply to us as well?
Well, as high school students, I'd say keep getting education, keep getting work. That would be the number one thing. But assuming that you're talking about even longer term and the possible outcome of a high school student, maybe 5-6 years out there. But when I talk to the teammates, we hire 2,000 kids from school every year, and we do sessions with them. And you always want to say is, be curious, keep learning. The minute you quit spending 8 hours in a classroom every day, your education's starting to go down, and the only way to maintain that is to keep reading, keep learning, and keep understanding things. And this is going to be tough on you, but if you read it on a phone screen, you aren't reading it, because it's not. You have to be able to read, the other page, and the page is skipped over and all that stuff, so you have to absorb, and that's tough in today's, because everything's curated for you. And I was talking to the football players at my alma mater the other day, and I said, that's one of the tougher things that you face. I didn't face. We had to read papers, and so you absorb a lot of stuff that wasn't what you were looking for, but it was next to it. So keep your mind broad, keep learning, keep doing that. Second is, if you look back and said, what I see in common traits of successful people is you never want to try to think across 40 years and say, I want to be that. And so a lot of people say, how do I become the CEO of Bank of America? And you say, there's going to be a lot of stuff that you're never going to plan that's going to come up. Your family, your health, your interest, distractions, people asking you to do stuff. So the question is, what do you got to be mindful of? It's what's going to happen next. And what you want to do is figure out what the next opportunities are available for you. Do a great job on what you're doing. Figure out what's available for you. Make sure you're developing the skills to do that opportunity. And then the third thing is, and I say this, and then Michael will say, well, you talked about how good your employee is, and that sounds like anti-work-life balance. But maintaining a work-life balance, put that in front, but never turn down an assignment. Your boss doesn't ask you to do something to waste your time, typically. And you have to sit there and say, if it's important to that person, it's probably important. And if it's important to that person, I understand why it's important, and then I can do it. And that will then help me figure out what is important in my unit, my division, and we find a lot of people who don't see, that seems like such an easy thing to think through, but a lot of people don't realize that when you get asked to do something, there's indication somebody's trying to either challenge you or trust you or need you, whatever it is. All those are good things. And so now you can't destroy your life and work past the point that you can function. So you have to balance that. It's unfair for the CEO to say that, but on the other hand, because it puts a burden on the teammate. But what you're really trying to say is don't forget that you have to do what people ask and be successful at it, because that's how you're going to progress.
Do the young gentleman behind you have another question? We'll end with you, sir.
Yes, sir. So Hopewell High School is in a very diverse area, especially when it comes to the socioeconomic status of students and their families. So does the Bank of America have any outreach programs or internships that can help people or assist students who strive for success?
Well, Charles, in town here, we do have a high school internship program, and so we can connect you to that. Typically, we've done programs for mayors and things like that around the country, and on the idea you need a structure behind it, and you want to make it part of a larger program. But Charles Bowman here can help you guys figure out how to get into that program.
Thank you, sir.
So I'd like to end, Brian, on a personal note. Back when the bank was having lots of challenges, my son had an interest in going to Brown University. Brian got wind of this and invited my 18-year-old son up to the 60th floor, which was quite impressive to him, to his parents as well, and you gave him some time, and he graduated from Brown, and I just wanted to thank you for that kind of attention. Ladies and gentlemen, Brian Moynihan.